A very good afternoon to everyone. I am CH Jain, the moderator of this webinar today. We are delighted to welcome all of you in this webinar being organized by the Continuing Professional Education Committee of ICAI. It is my pleasure to be the moderator of the webinar on overview of Form 10B and 10BB and recommendations of 52nd GST Council meet. In a short while, we will start with the webinar. And before that, I would like to apprise you about the CPE committee. The role of a chartered accountant is evolving continuously to accept the newer responsibilities in a dynamic global environment. The future of a CA profession depends on being flexible and open to innovation. Therefore, the need of the hour is to innovate as per the requisites of the contemporary business environment and accordingly upgrade the curriculum and education system of the chartered accountancy course. The committee also believes that members of ICAI should look beyond the traditional areas of practice and seek and explore new areas of business and profession, and hence the CPE committee is mentoring the members by providing guidance through various workshops, seminars, national conferences, background materials, etc. And simultaneously by encouraging young and dynamic professionals to grow as speakers, master of ceremonies, etc. in the CPE programs. We are pleased to inform you that ICAI is organizing the first ever Global Professional Accountants Convention, the GLOPAC, on the theme Connecting the Globe, Creating Value, from November 24 to 26, 2023 at Gandhinagar, Gujarat, India. GLOPAC is being celebrated as a mega event to display the important role that the accountancy profession has been playing in building stronger and more stable economies around the globe. It would provide an opportunity to the global market to network with the best F&A and talents in India. Now, let us have a look at a small teaser of the GLOPAC video.
It gives me immense pleasure to announce that the Institute of Chartered Accountants of India has decided to organize its first ever Global Professional Accountants Convention, GLOPAC, on the theme Connecting the Globe, Creating Value, on November 24th to 26th, 2023 at the Mahatma Mandir, Gandhinagar in India. GLOPAC is being celebrated as a mega event to showcase the important role that the accountancy profession has been playing in the economic and social development of our country.
Globalization has made the world one village, and the services of chartered accountant are also available globally without any boundaries. The Institute of Chartered Accountants of India is also devoting significant efforts towards global networking. The convention shall be attended by more than 3,000 delegates from around 40 countries. I would like to extend a warm welcome to the fraternity on behalf of ICAI to attend and participate in the first ever GLOPAC.
ICAI is geared up to welcome delegates from across the globe at the GLOPAC.
Now let us discuss the program for today's evening, which is as follows. We have 2 sessions of 1 hour each, and the topics are recommendations made in the 52nd GST Council meeting held on 7th of October 2023. And the second session would be an overview of Form 10B and 10BB. Our eminent speakers will talk about the above mentioned 2 emerging areas and of professional interest. Before I request the Vice Chairman, sir, of the CPE committee for his welcome address, would like to share a brief profile of him for the benefit of all. C. Gyanchand Mishra ji is the Vice Chairman of the CPE committee and the Chairman of the Committee of Insolvency and Bankruptcy Code of ICAI. Presently, he is serving the Institute of Chartered Accountants of India as a Central Council member and the convener of the Tender and Monitoring Group Directorate of ICAI. He has more than 25 years of professional experience standing to his credit as an established chartered accountant. Under his vision, this year the CPE committee has taken many new initiatives for the members. I request, sir, for his welcome address.
So much thank you, Chabi Madam, very respected speaker of the program, Mohit Golcha ji, moderator Chabi Madam, another speaker who will be joining us very soon, Sri Avinash Gupta ji, secretary of the committee who is dedicated round the clock, Ajita Tiwari ji, and most importantly are the respected participants who have joined the program from not only the country but across the globe. Good afternoon to one and all. Friends, we all know that this is one flagship program that we carry in CPE committee on every Wednesday. This is to our unstructured CPE learning program. And we try to take the contemporary topic, which is a need of utmost importance and which is, need of time. So, the 2 topics, one with respect to the recommendation of 52nd GST Council meet, that is to be deliberated by Mohit Golcha ji, which is present virtually, and the other one with respect to the filing of 10B and 10BB form, which is again a talk of town nowadays because a lot of changes have happened this time in the trust audit, the NGOs audit. So these 2 contemporary topics are to be discussed today. Friends, will not take much time as the speaker is here and we all are curious to listen to him. But very importantly, that the objective of the committee is to reach to the last person of the community who is putting to the B category city or to the village, tehsil town. And probably we are trying that each one must connect to the CPE committee, not only for the purpose of CPE fulfillment, but also for the actual knowledge, upliftment, and value addition in their career. And in last 1.5 years since I have joined the CPE committee, we are trying a lot of reforms also. This year we are targeting some reforms with respect to the especially information technology, and that is under pipeline. Sooner we will say that a lot of things have happened under information technology with respect to the CPE committee working is concerned. I always invite to all the members who could come as speaker, moderator, experts, paper writing to the committee, because if we see, this is knowledge dissemination is only thing which more disseminated, more increased. So time has come that each one has to be expert, and even if we want to practice in any area, the time is that we have to be expert of the subject also, not only of the topic. So friends, I will request you that if you are really interested to be part of CPE committee, please come and join us in any shape, whatever you like. And be assured one thing, that we will try to have more and more programs, not only virtually as webinar as we are doing today, but we are trying to have more programs with respect to the various topics in the branches, CPE study circles, and of course, regional councils, so that the members can get the benefit of the committee to the fullest extent. So I'll not take much time. I compliment Ajit Nath Tiwari ji for his dedicated effort 24/7 to make it happen, that this untiring program is being continued flawless, and the best of the speakers are on the platform. And I'm thankful to Chavi Jain Madam for her precious time to moderate the program today. Thankful to both the learned speakers for their continued support, because Mohit Bhai has come second time this year. So Mohit Bhai, I am thankful to you that you have spared your valued time to mentor the members at large. So thank you, Madam. Please continue with the program.
Extremely grateful, sir, for sharing your vision with us. To carry on with the first technical session, before I invite our first technical speaker, CA Mohit Golcha ji, I would like to share his brief profile with all of us for the benefit of the audience. CA Mohit Golcha ji has done his graduation in the field of commerce in the year 2005. He is a GST corporate trainer and guest faculty of GST at various institutes. He is regularly conducting the seminars and workshops on GST as a speaker. He is also an author of the book titled Refund in GST, Much Wider Scope Than You Thought. I request CA Mohit Golcha sir to take over the session.
Good afternoon, all of you, and it's a pleasure to be part of this. And I thank Institute to giving us the opportunity in order to express our view in respect of the recent amendment which has happened in the GST Council. So I'm just sharing my screen and would try to deliberate the same within the allotted time. The one thing which recently what we are seeing is that whatever the recommendations are coming, they are basically in concern in respect of the industries. So one thing is clear that as we say that it's real time that the India is there, and whatever the government is also doing is understanding the nitty-gritties and the challenges which the industries are facing. So whenever we will be going to the recent recommendation which has been discussed in the GST Council, we would be able to appreciate the fact that government is really putting up all the efforts in order to make sure that whatever the ways they could ease the business as well as reduce the litigation, they are doing that. So what the presentation would be, it would be divided into two parts. One, first of all, I would be discussing all the concerning area where the recommendation has been given by the GST Council, considering the challenges which the business are facing right now. Second part, I would be discussing the rates which they have changed in order to, or they have given the clarification. So the first and foremost, the welcome step or the step which I would say would reduce the n number of litigations and would help the business in India to grow. That is the amnesty scheme. Why I am saying so? Since it's a beginning of new law, that is the GST, which came into the pictures, and since it's a completely online based, and it was a position that where we have changed, the revolution change was there in across the globe, across the country. So there were certain things that we have received certain orders. They were orders which were served on online, and where the registered person or the businessman was not able to take the appropriate action on the appropriate time. So I thankful to the government that they have come up with a scheme, that is the amnesty scheme, which would be applicable in respect of all the orders which has been passed under section 73 or 74. When I'm talking about these, that is the demand orders which has been generated by the department in respect of section 73 or 74 up to 31st March 2023. So make a point that it is taking a positions of all the orders which has been issued 31st March 2023 in respect of the demand which has been raised under section 73 or 74. So they have allowed us the time to file an appeal in case we want to adjudicate, and they have given a second opportunity to us that whatever we want to represent in respect of the additions which has been made in these demands order, we have the time. Now, second part which what we need to understand is that they have given the two conditions. Basically, first, the rejection could be merely on the position that the appeal was not filed within the time. The time limit which they have given is the position that it has to be filed within 3 months, or it may be extended by 1 month by the positions. Secondly, the appeals were filed against these orders, but they were solely rejected on the ground that since these appeals were not filed in the time, so they have been rejected. So it's a second opportunity which the government has given to all the registered person, all the businessmen, just to come up and say what they want to say in respect of the demand orders. But with the condition, what they have done is that there was a normal provisions in which the pre-deposit was only of 10%. Since they have given the amnesty, they have just asked us to give us the more than 10%, that is 12.5% each, in respect of which the 2.5% has to be deposited via cash ledger. Second, whenever we would be filing the appeal, the pre-deposit is a mandate conditions. So the government is saying 10% you can deposit either in the cash, either in the credit ledger, but 2.5%, the additional, that is the more than 10%, has to be deposited in the cash itself. So it's a welcome step in which I believe the litigation would reduce. Second, since the start I said that the government is basically making all the efforts in order to ease and in order to reduce the litigation. The second burning issue which was there in the country, and it is coming from the service tax era also, was the personal guarantees given by the directors. Now, what is these personal guarantees? Suppose I am running a private limited company or any company. So I need the funds. I need the funds in order to operate my business in a manner in which it has to be. So whenever I go and ask the bankers to give the credit limits or the loans, they generally tend to ask us to give the personal guarantee in order to secure themselves. So generally these guarantees are given by the directors to the bank, that in case if something happens to the business, they would be held liable and they would be making the goods if there is a loss. So there was a position that in the GST law, there are certain things that are chargeable under the GST, even if the consideration is not flown. So what the GST law was saying, that it's a supply of services which the director has given to the company, and that too without consideration. So due to the deeming fictions, it was coming under the definition of supply and was being taxed, or there was a position where the notices have been come, where the officers are asking us, the company, to deposit the GST under reverse charge on the services which are provided by the director in the form of personal guarantees to the companies. This recommendation, the 52nd recommendation, has given us the clarity that in case if the directors are not charging anything from the company, so there won't be any GST. So with this recommendation and the notification which would be following soon, would rest n number of issues which are in respect of the personal guarantees. And I would appreciate again the government, the step which they have taken. They have understood that in order to get the money or in order to get the limits from the banks generally tend to take the personal guarantees from the directors. However, directors generally do not charge or do not take any money from the companies. So what they say, that in case if you are not charging any money or if you are not getting any consideration from the company, there won't be any GST which would be leviable on these transactions. And they have said that the open market value of these transactions would be treated as zero. This is a pictorial presentation of what I have said. So what it could be, there could be two types of transaction. One where the consideration has been received, and second where consideration is not received. So what it says, that if the consideration is not received, GST won't be charged. And in case the directors are charging something, that in order to give the guarantee, they are asking the company to pay them. So in that case, whatever the charges the company would be paying to the directors would be liable under reverse charge, and the company has to deposit the GST as well as pay the liability under reverse charge for the guarantees which the director has provided to the company. Second one, since we are growing at a good pace, so there are guarantees which are to be given by the corporates also to their subsidiary, to their related persons. So in this case, it was there also in the service tax era or the erstwhile law that the corporate guarantees were treated as the services and service tax was leviable as well as in the GST. But the major challenge was that how to calculate the value. Since the rate or the valuation of the corporate guarantee would vary from any percent from 0.5% to 2% to 3%. So there was a position, there was an ambiguity that what would be the valuation or what would be the value that should be charged in respect of the corporate guarantee. So they came up with a recommendation that higher of the two, that is, they have given a blanket of 1%, that 1% of the amount of guarantee which has been given, you can take that value, or the actual value, whichever is the higher, would be considered as the value for the purpose of levying the GST. And they have mandated via circular also that this rule has to be followed whenever there are transactions in respect of the corporate guarantee. But we would be eagerly waiting to understand that since the guarantee charges is for the guarantee period, so whether it would be calculated every year and it has to be deposited every year, and what would be the mechanism that it would be charged at the beginning of the year or at the end of the year, or what it would be. So we would be eagerly waiting to see that what the clarification comes in. There is a different school of thought also which is coming out that this may increase the financial cost in respect of those companies where the ITC or the credits are not available. So let us see that what the clarification comes, but it's a welcome step where they have again tried to reduce the positions of the litigation in respect of the burning issues where there are handsome amounts of demands which have been involved and which has been issued under section 73 or 74 by the department for all these issues. This has been summarized in a manner that where the consideration, where there is no consideration is there, the company has not charged. So in that case, the deeming fiction would be coming and the value would be considered as 1% of the guarantee offered, and it would be liable under forward charge. So whenever the corporate guarantee is there, they have clearly said that whatever the charges, whatever the levy has to be done, it has to be under the forward charge. In case consideration is involved, suppose the related person is charging for the corporate guarantee which he is giving to the company. So in that case, what they say that 1% or the consideration involved, whichever is higher, would be considered as the value for the purpose of levying the GST. So again, they have come up with the clarity that what has to be done. So what we have experienced that if we are able to know that what has to be done, so the compliance would be at a greater level. So in respect of the guarantee, it has been clear. Now comes the real issue, that is the provisional attachments, which we are seeing across India. There are n number of cases which are coming where the properties are being provisionally attached. And as per law, it has clearly mandated that the provisional attachment can be only for the 1 year. But since it was lacking something, so they came up with a clarification that wherever, whenever it would be provisionally attached, it would be seized, automatically seized after 1 year. So they would be giving up a clarification and making certain amendments in the respective rules where they are saying that there is no need or the effect of provisional attachment would automatically cease after the expiry of 1 year from the date of said order. So again, if we see this, since there are n number of judgments which have came in favor of the SSE where the court has exclusively said that the effect of provisional attachment would always cease after 1 year. So now it is coming in the law that would also reduce the number of litigation which are there in the country. Clarification. Now there is a challenges which we are facing in respect of the place of supply, since in GST, the tax has to be paid, that is whether CGST, SGST or IGST, it would always depend upon the place of supply. So in case the place of supply is the same state in which the supplier is providing the services, it would always be coming under the head CGST and SGST. So where the registered person supplies or provide any services which is other than the state in which he is registered, so IGST tend to come in. So there are three services which are growing right now, and they need certain clarification that what tax has to be charged, whether IGST has to be charged or whether CGST and SGST. And these are making a good play in respect of the development which we are right now facing. That is first and foremost, if I am discussing that it is in respect of the transportation of goods. So this entry, whenever the services of transportation of goods by a person maybe sitting in India to a person sitting outside India or either of the positions. In that case, there was a section 13 subsection 9 of the IGST Act which was exclusively dealing with this. So this was deleted with effect from 1st October 2023. So now the positions is that what has to be done. So there the clarification is still pending, whether the default has to be seen, that in case of a default positions, we tend to take the place of supply as a place where the customer is providing us the address or where the customer is placing. The registered place of business of the customer is taken as a default as a place of supply. In these three services, second one is supply of advertising and the third one is co-location services. So in these three services, we are eagerly waiting to see that what the circular would be coming in respect of that what should be the place of supply. So whether the IGST has to be charged or CGST, SGST has to be charged, it would be clarified very soon. Now, let us come up with the position that in respect of the export remittance, where the services has been rendered and the registered person has fulfilled all the condition in respect of the export of services which has been mentioned in the section 2 subsection 6 of IGST Act. So there is one major condition where in order to promote more export and give the incentive to the industry, so the government was always putting up a position that the foreign currency has to be coming to India. However, they have made the positions in the act itself clear that in special cases, if the RBI permits, then the money can be received in the INR also. So now in this, they have come up with a clarification that if the money is received in Vostro account, however, it is received in domestic currency, then in all that case also, the export of services would be classified as an export of services, despite the fact the money is being received in domestic currency. So again, they are giving up a position that you do the business, we would be giving us all the clarity which you requires. Allowing refund route. Now, what is this? Earlier there was a position that there could be a refund of zero rated under two positions, that is one without payment of tax, second with payment of tax. So that was clear, but now they have come up with a clarity in respect of the supplies made to SEZ with payment of taxes. So they are saying that this, if we do the supplies to the SEZ with payment of taxes, we are eligible for the refund, subject to the positions that there are exceptions which has been mentioned in respect of the commodities which are there in notification number 1/2023 issued on 31st July 2023. Except those items, if we are making any supplies to the SEZ with payment of tax, so we are eligible for the refund. Now let us understand the second position, that is the most important, for which we are waiting since the inception of the GST, that is the GST tribunal. We are hopeful that it would be coming very soon, that time to come in that we would be seeing that the tribunals are being formed. In that, they have made certain changes in respect of the appointments of the president and members of the GSTAT. So what they are saying that the person who would be there in the GSTAT should at least have a 10-year experience in the respective field of the indirect tax, whether as an appellate tribunal or etc., or High Court or Supreme Court, to be eligible for the appointment. So first and foremost, the experience has to be there with a minimum 10 years of the experience. Secondly, what they are saying that the minimum age for the person who would be appointed as a president or a member has to be 50 years. 50 years has to be minimum age where he would be considered as a eligible person. Then they have given a tenure, that how much tenure the member would be holding the post. So for the president, they have coming up with the 70 years, and for the members, it is coming up with the 67 years. So these are the some minute changes which has been done on the basis of the recommendation of the industries or on the basis of the recommendation of the advocates across the India, which they have given, and they have taken in a manner in which it has to be. So if we see this 52nd GST Council meeting, all the issues which were critical enough and which needed a clarification from the government end in order to make sure that the businessman is in a position to do or to justify himself and to do what the government wants. So they have come up with the clarifications. This is the major one, the ISD mechanism. In the 50th Council, they have came up with a clarification which itself says that in case of the cross-charging or ISD, whatever they have adopted the approach, we will not be challenging anyone. But in that, they have mentioned that we would like to ensure that the ISD mechanism should be in operation in respect of the services which are being received by the HO for the branches. So they are now coming up with the positions that in future, that is in prospectively, it would be made mandatory in respect of the services which are being received from the third party by the HO. There we are supposed to follow the ISD mechanism instead of cross-charging. So we will not be having any option whether we can adopt the ISD mechanism or the cross-charging. In going forward, the future would be the positions where it's a made mandatory or it's a compulsory thing that in respect of those input services procured by the HO from third party, but attributable to the HO or to the branch office, then in that cases, we need to follow the ISD approach instead of cross-charging. So what we are seeing that whatever has been done in the past, whether it's a cross-charging or whether it's a ISD. So government is saying we are very much fine with that. But going forward, we need you to adopt the policy or adopt the mechanism which has been set up for the purpose of ISD. So going forward, we should prepare ourselves in respect of these common services that we should adopt the approach of ISD instead of cross-charging. Now let us see the certain changes which they have made in respect of the goods and services. And all these changes which they have made has been made on the submissions or the positions which the industry was facing, and that was being required, that these changes are required in order to ensure that there are a smooth working which should happen across the country. The first one, where the change is there, that is in respect of the millet. Since we as a country, we are promoting the millets and keeping up the positions of the millet that it's have a n number of benefits in respect of our health. So the government wants to promote that. So by reducing the tax rate, that is from 18%, it is recommending that it should be 5%, as well as nil tax rate in case if it is being sold other than pre-packaged or in the other than labeled form. So what they are saying is that if the millet flour in powder is being used in any manner, having at least 70% of that is 70% of millet is there. So in that case, they would be giving us the relaxation or the benefit of the reduced tax. So if these are being sold loose or without pre-packaged, so they would be completely exempt. So what we need to understand or what we need to make a point of here is that whenever the composition has to be made, it has to be seen that it is at least containing 70%. So what I can say is that minimum 70% of millet has to be there in the flour, in the preparations, in whatever you do. So if that is the condition, if it is being satisfied, so in those cases, the tax rate, if they are being sold other than the pre-packaged and the label form, the tax rate would be nil. then if they are being sold in a branded or in the pre-packaged manner, then the tax rate would be 5%. So what we need to ensure is that the content of the millet has to be 70% in order to avail the benefit of these tax rates. Then let us come up with a second change which they have suggested in respect of the tax rate. So the zari, the thread which is being used by the industry at large. So there was a confusion that what would be the tax rate. Since in 50th GST Council meeting, they come up with a position that the tax rate would be 5% in respect of the zari and etc. But further clarification was required in respect of the thread which were made from the metallized film or the plastic film. So what it says that the tax rate in respect of these zari which are made from the metallized polyester film or the plastic film would also be covering under the 5%. With the positions that if the tax rate was high, so in case the tax rate was higher, that is 12%, then if it is coming under the 5%, so there won't be any positions of the refund there in case of a change of tax rate from 12% or from the higher rate to lower rate. So they have given a clarification in respect of that the tax rate would be 5%, but you won't be entitled or you won't be eligible for the refund in respect of the inversion of duty. So what they say that whenever there is a prosperity, the tourism also promote, and tourism is a position, or whenever we travel, we need to understand and we try to learn the culture of other countries as well as the places. So to promote the tourism, the specific recommendation has came in respect of the foreign flag going vessels if they are converted into coastal lanes. What they're trying to say is that some vessel has came to India and so if they were to be bought or they were to be imported, so the tax rate was 5%. But if they are being temporarily converted into the coastal runs, so the government is saying the temporary run, what the temporary run means is for the purpose of 6 months. If they are being used for the purpose of tourism in India, their tax rate would be exempted. So there won't be any levy in respect of those foreign going vessels which are there for the purpose of coastal run, and the time frame for that is the 6 months. So within 6 months they can use for the coastal run, and after that it has to be again reconverted into the original positions from where it has begun. So there has been specific definition in respect of the foreign going vessel or aircraft which has been defined in the Custom Act also. So again, what we are seeing, it is trying to promote the tourism in respect of the coastals where they are there, so that the people of India can enjoy more of the tourism in India, and the more the spending, the more the prosperity for the tourism industry would also be coming in. Now, let us come to the other item rate, which has also created a chaos in the industry, that is in respect of the ethanol, extra neutral alcohol. Fundamentally, the alcohol for human consumption was always outside the purview of the GST. But there were certain challenges which were faced, and there were certain positions which were taken by certain officers in respect of these, that they were saying that it's a taxable thing under the GST. So the GST Council has come up with a position that no GST on ENA used for manufacture of alcoholic liquor for human consumption would be. So they are coming up with a clear-cut position that the extra neutral alcohol, if it is being used for human consumption, there won't be any GST on that, and it should become outside the purview of the GST till it is being used for alcoholic liquor for human consumption. But if it is being used for industrial purpose, so they are suggesting that it would be taxed at 18%, and a specific entry for the same would be inserted or created at 8-digit level in the custom tariff in the time to come. So again, they have made sure that whatever the pop-ups were coming in respect of this, the tax rate or the chargeability in respect of the alcoholic liquor for income consumption, they have given a rest to that. Now there is a more important again item which is related to the alcohol or the molasses. Molasses, the tax rate has been reduced from 28% to 5%. So what it would help is it would give a prosperity in industry, specifically to the sugar industry, to have a faster clearance of the gains due to sugarcane farming. Since 28%, if I am selling, suppose 1 lakh is goods, so earlier it was 1,28,000 payment, now it would be 1,05,000. What the tax, by reducing the tax, the liquidity would also be flowing in the industry and would result that there would be a higher volume of the sales which would be achieved, as well as would be giving a position that where the working capital would also be smoothing in near future. Now let us move to certain changes which have been made in respect of the services. So first and foremost, they have given up the clarification that that when there was a exempt services or the composite services provided to the central, state, UT government and local authorities in relation to any functions to panchayat municipality article under 243G or 243W of the Constitution of India. So earlier also it was exempt, but they have come up with a clarification again restating that these services are being exempt if it is being purposefully purely used for the purpose which has been enacted in the notification number 12/2017. Further, what they have said that these exempt services supply to the government authorities in relation to the following services would also be exempt. That is in relation to the water supply, public health, sanitation, solid waste management, and some slum improvement and upgradation. So if the services are rendered to the government authorities in relation to these objectives also, so then in that case also the services provided by the supplier to the government authorities would be exempt, and there won't be any levy of GST on these services. Then the clarification which was there in respect of the tax rate which has to be charged when there was a job work in relation to converting the barley to the malt. So what we have seen in the industry that there were challenges that it was being taxed at 18%. Now the clarification is there, which is candidly and specifically saying that these all would be charged at 5%. And 5% as applicable to job work in relation to food and food products. So again, the issue of tax rate has been clear-cut being resolved by giving up the clarification, as well as maybe the notification would also be following. This one is more interesting recommendation which has been there. What it was that, again, it has seen the practical challenges which the industry was facing. So what it was there that suppose I am a company having buses. So in case if I am providing a services through e-commerce operator, since whenever we are providing any services from e-commerce operator in respect of the buses, the e-commerce operator was supposed to pay the GST on it. So if the e-commerce operator was supposed to pay the GST, so my outward taxable supply would tantamount, even if it is taxable, would tantamount to be an exempt supply for the purpose of reversal of input tax credit. So when the services were provided, so what was happening is that I was not eligible or was not in a position to avail the credit of the GST which I have paid on the buses. And whenever we are buying buses, there are a huge amount of the credit which are being involved. As well as whatever the operations I am running, let it be its repair and maintenance, let it be services, all the expenses on which the GST was leviable, I was not able to get the credit since my outward supply was falling under the section 9 subsection 5. That is where I was supposed to pay, or I was not supposed to pay the tax under the forward charge. In this case, the e-commerce operator was supposed to pay the my GST liability. That's why I was not eligible to pay to take the benefit of the ITC which I have paid. So what the government is saying that in case of the organized business operator, that is the companies, if they have the position, they are operating from the for the buses and they are providing these services through the e-commerce operator, then in that case, the companies are liable to charge the GST under the forward charge. So they would be excluded from the purview of section 9, subsection 5, where the e-commerce operator will not be charging any GST from the customer under section 9, subsection 5 in respect of those suppliers whose constitution are being as a company. So if they are being supplier having a constitution of the companies, then in that case, the supplier has to charge the GST under the forward charge, not the e-commerce operator. If that would be happening, what it would result is that it would result in a position there would be any blockage of the ITC. Secondly, they would be in a positions to make sure that their cost is not incurred at positions of the GST, which is becoming right now the cost, since they were not eligible, they were not legally eligible for the purpose of taking the input tax credit. Another change which has came in respect of this is that the District Mineral Foundation Trust, they have said that it should also be considered as a government authority for the purpose of GST exemption. So wherever the GST exemption is there in respect of the services being provided to the governmental authority, so DMFT has to be considered as also a governmental authority, and whoever being services providing to the DMFT, they would also be classified as an exempt services. The last one, that is the services in respect of the railways. So now railways also asking us, the government, that they want all the services to be taxed under the forward charge. So if we see that there are two mechanisms in respect of which the charges could be there, that is, one is forward charge, second is reverse charge. If we opt for the reverse charge mechanism, it would always be a case where the service provider would not be eligible for taking the input tax credit. So once he is not taking the input tax credit, there is a position that his cost is being increased to the extent of the tax which he has incurred or which he has paid to his supplier for taking the services in order to provide the forward service. So in those cases, wherever the reverse charge mechanism is there, the cost is getting increased on account of the taxes which has been paid by the supplier and which he has paid to them, as he is not eligible to take the credit. So the government or the railway has come up with a position or has given their representation that whatever the services or all the services which they are providing to anyone, they want it to be taxed under forward charge instead of reverse charge. So what it would do is that it would help us in order to reduce the cost for the Indian Railways. So this was the last change which was recommended in the GST Council. I hope I have clarified the positions which were explained in 52nd GST Council. And if we see or if we summarize it in a manner that whatever the changes or whatever the recommendation has been made by the GST Council, they all were there. They all were creating the challenges to the business fraternity. And with these recommendations and with these clarifications, the government has came up with a position which help the businessman to excel, to survive and to grow and to reduce the litigation in the future. Pragya ji, are you there?
Hi, Mohit sir. There are a few questions which we have with us. So I'll be taking one by one with you. The first one being, The first one being in section 13.3, whether 7 governing body members of society registered under Society Registration Act be considered as trustees. Similarly, whether directors of section 8 company will be considered trustees. This is, I think, for
I think it is in respect of the income.
I think this is in respect of say, section 10B and 10BB. Yes. I don't think so. We have questions regarding the GST Council meeting which I've received.
If there is no questions, so what we can do this since we have, I think, 8 minutes with us. We can just summarize that whatever has been discussed and so let us revisit all the changes in a summarized manner. That first, what we discussed was the in respect of the corporate guarantees. The guarantee, it can be on the personal guarantee as well as the corporate guarantee, which was given to the bankers as well as to the related persons. In that, they have given up a position that the valuation has to be done in a manner which they have said that it has to be on a 1%. So this was the good positions. Second was the MNC scheme. Again, it would make sure that whatever the positions are coming, whatever the positions in respect of the orders which has already been passed under section 73 or 74, they are need to be taken in a position that the window would be opening up in the GST portal, and then we need to put up the reply. Just one thing in which we need to ensure that there is an additional 2.5% which has to be deposited as a pre-deposit, and it has to be deposited in the form of the cash, not in the form of the credit. Then there was a position that the attachments were there, provisional attachments, since the recoveries were there in cases of the GST. So they have came up with the position that the provisional attachment has to be only for the 1 year, and it would automatically cease to have the effect after the 1 year. So they would be making the certain changes in respect of these in the form DRC 22. However, there was a clarification in respect of that earlier also, where they have clarified that it would, the position of the commissioner has to do or has to give the letters of after the 1 year that the attachment would cease to have the effect. Since they want to avoid that step, so now they are saying that if the provisionally attachment is there, it would always be having a cease effect after the completion of 1 year. Then there was a amendment in respect of the money which is being received in Indian currency in respect of the export of services. So whenever we were making the exports, it was a basic condition that it has to be coming in the foreign currency. But however, if the RBI has permitted in respect of certain transactions, the money can be received in Indian currency. And in those cases also, the services which has been rendered to the foreign customer would always be classifying as an export of services and would be eligible for all those benefits which are available in respect of the export of services. Then it was the positions of the e-commerce operator where the buses industries or the fraternity was facing the challenges in respect of the ITC, which they were not able to avail in respect of the services which they were providing from the e-commerce operator, since the services which were rendered through e-commerce operator were leviable under subsection 9, subsection 5, where the e-commerce operator was supposed to pay the liability under the reverse charge. So in those cases, to the extent of the services which were provided through e-commerce operator, the buses or the companies which were having the buses were not eligible or were not liable to get the credit on those services, and their credit was supposed to be reversed. So now this was the welcome step which has ensured that now the buses operators who have the organized position, they are running through the companies, they would be eligible to take the credit. Then we have given up a position in respect of the extra neutral alcohol, where they have said that it would be outside the purview of the GST and would not be taking a stand that the GST would be leviable on these transactions or on these supplies which are being made. But they have said that in respect of the industrial consumption, if it has to be there for the industrial consumption, then the levy would be there and they would be inserting a separate entry for all these positions. Then there was a clarification in respect of the place of supplies, specifically 3 services which are there, which are growing at a greater speed. That is, one is in respect of the transportation of goods, including by mail, courier, or etc. And second, the supply of advertising, since we are living in a digital era. So the advertising is playing a major role in all the industries, and the advertising industry is seeking a position that what would be the place of supply in respect of the services which they are providing to their customers, as well as the supply of co-location services, the co-working and the co-location. So whether it would be related to the immovable property, the place of supply has to be defined according to that, or it has to be treated under the default provisions where the credit would be flowing or the GST would be charged on the basis of the person or on the basis of the customer address which has been provided on his GST registration certificate. Then there was a thing that to promote the tourism, they have come up with a position that foreign going vessels were converted to the coastal runs. And in those cases, they have given a complete exemptions. However, if in the normal case, it was to be taxed at 5%, but if they are being temporarily converted for the period of 6 months, in those cases, the GST would not be levied. Now, the millets, since we are also celebrating or we are also participating actively in International Year of the Millet, which has happened during this year. So there, the government is giving up the incentive by saying that if the composition of flour is coming where the 70% of the millet is being used, so if in 2 cases, they have given a 2 different tax rate. One was the nil tax rate if it is being sold as loose or other than labeled. So they are saying that the tax rate would be nil. And in case if it is shown under the brand, then the tax rate has to be 5%. So this would always be boosting up the industry where the tax rate has reduced from 18 to 5% or whatever the tax rate, if it is being reduced, it is finally would be helping the end customer in paying the lesser amount. Correspondingly, they have made the changes in respect of the job work, where the barley is being converted into malt. So the tax rate would be 5% instead of 18%. And ISD, I think ISD would play a major role in the coming period, where they are saying that it has to be mandatory. So the approach which were already being followed by all the registered person in respect of the cross charging has to be amended and has to be modified as the provisions or the government is requiring us to get into the shoes of the ISD wherever it is being applicable. And we need to follow the provisions which have been stated in respect of the ISD, and they has to be followed in a mandatory manner. So there now we don't have the options, since they have given the option in the 50th Council that whatever you have choose, it would be fine. We will not be making any addition. But going forward, they have clear-cut said that you have to follow the ISD mechanism wherever it is being applicable. So जहाँ पर भी वो applicable होगा, we need to ensure that it is being followed. Then the good one was the recommendation which they have given in respect of the services which are being provided by Indian Railway. So what they are saying that whatever the services is being provided by Indian Railway, it has to be coming under the forward charge instead of reverse charge. So I hope I have summarized all the positions, and it would be helpful for all of you to understand and to make their respective changes in respect of the recommendation which has been given by the 52nd Council, GST Council meeting.
So, since we have already discussed the 52nd Council meeting, let us quickly, since we have around another 5 minutes with us, can we discuss any new case law which you have just gone through on refunds, or like we just had a couple of case laws from high courts. Yesterday also we had another interesting high court case law.
So we can discuss one point that is in respect of the online gaming, which is right now burning topic, and the youth is also there. The clarification and the buzz is also there, which was there in the 52nd also. In the press release, the people were asking that what would be the fate in respect of the demand which has already been created in respect of the online gaming, since has been a good chunk of amount which is being involved, and which could decide the future of this industry also, that what it would be, since the amount of the addition or the amount of the tax which is there is a huge one. But in the last meeting which they had, they have now given up a clear-cut position that the tax rate would be the 28%. So there won't be any positions in respect of the tax rate. So they have said that tax rate would always be 28%. There was a challenge that what would be the value on which the tax has to be calculated. So it was also resolved in the 50th Council meeting that the value which they would be taking is the value at the time of the entry level. They won't be seeing that what the consumer has incurred the profit or loss. So what it has simplified in a manner that whenever I am going to a casino or some place of like that, I'm buying a positions of 100 or 100 rupees. So at the entry point of time, the tax rate would be levied. Suppose I take a positions, we 5 friends goes to a casino and then we take a positions and we pay him 500 rupees. So at the time, whenever he would be receiving the money, he would be levying the GST. Not at the time he would be understanding that out of the 5, who has earned more. So suppose I take an example, I go and I win, I pay 100 rupees and rest of my 4 friends also pay. So at the end, the objective was to collect the tax on the 500 rupees, since it was the amount which was involved. So what they were saying that charging at the initial point of time would
amount of token probably, or the entry fee which you'll be taking, or the token which you'll be taking for playing the casino. What you win from it or lose from it has nothing to do with GST.
It would be difficult to understand that how much I have won. And it would be very much difficult to understand that after winning, I have always been investing something. Suppose there would be a position that I earn 400 or I earn 600. So again, it would be reinvested. So they say that we are not concerned in all these aspects. Whatever we would be doing at the initial level so as to make the life simple. And it would help the compliance positions also to a certain level. Rather than seeing that who has won, who has not won, it would be difficult for them to see each and every table of the positions. Then in the last council, there was one more important, why I am saying so, that whatever the recent council meetings which they are doing, they are really taking up the positions, or really they're taking up the challenges which are being faced by the industries. So there was last, on the 50th council, there was one more issue which was creating certain problems across the India, was the GST leviable on the warranties. That is warranty, as well as the input tax credit, whether the same would be eligible or whether the same would be available to the person or not. So in that case, they have said, clear-cut said, that in case of the hands of the manufacturer, there won't be any ITC reversal in respect of the warranty or the replacement which he is giving to them. Since, as well as whenever I am selling something, I am already taking a part of that in my sale consideration. So I hope the learned speaker for the next section is there. So it was
And we
a
had
pleasure
to
be part of
extend your 10
ICI.
minutes extra because of the next speaker. And but we have a beautiful audience of more than 800 people who joined us for this webinar and to hear your session. And before you leave, I would, ladies and gentlemen, would like to thank our learned speaker, Shri C.A. Mohit Golcha ji. I would like to extend my heartfelt gratitude and for gracing us with his knowledge and insight in today's webinar. His expertise and valuable presentation has enriched our understanding of the 52nd GST Council meet recommendations in a very lucid manner. We also went again over it and revised it and summarized it. We are truly fortunate to have such an accomplished professional to share his wisdom with us. Thank you so much, Mohit Golcha, sir.
Thank you.
Thank you, Mohit.
Moving ahead with the second technical session for today's webinar, which is the overview of Form 10B and 10BB, which is to be taken up by CA Avinash Gupta ji. And before he takes up his technical session, would like to read out his brief profile for the benefit of all the members, more than 800, 850 members, which we are today, for their knowledge and brevity. He did his graduation from Sri Ram College of Commerce, has authored 3 books on international taxation, transfer pricing, and UAE corporate tax. He has delivered more than 3,000 lectures at national and international level. He's also a visiting faculty of the National Academy of Direct Taxes, Nagpur, and other regional campuses, Sri Ram College of Commerce, ICI, and Management Institutes. I welcome Avinash, sir, to please go ahead and apprise us with this technical topic, and which is the buzzword for next around 15-20 days, Form 10B and 10BB. Welcome, sir.
Thank you. Thank you, Chavi madam, for giving me this opportunity to speak with the professional colleagues on this very important topic of the day, which is Form 10 and 10B. I think this is a form which is of a great concern for all the professionals these days. And the due date we still have 12 days time to file it. My preliminary observation of this form is not that difficult what people have made it. So everybody is talking about that this is very difficult form, how we will fill it, how we will get this. So this is nothing like that. So first of all, my request to all my professional colleagues is that this form, you take it as a normal form. Yes, the form is asking you to provide so many details, so that we need to give it to them. So I will take you through with the form one by one. But first, preliminary observations that I would like to have is that we need to have this form, which is not like people are worried about. Yes, there are problems in the form, because the problem is not because of the information what they are asking. The problem is because the assessees, the trust, do not have compiled these information, and these are not readily available. Because as an inherent limitation of this sector, which is the NGO, NPO sector, So there we do not find good amount of accounting records being maintained. We do not found that people are maintaining adequate documents, etc. But now, because all the donations, etc., we need to file form 10BD, etc. So now the information is coming from them. Now let us come with the clause by clause of this form. So I presume that everybody knows the law, and I'm not dealing with the legal provisions which is applicable to the charitable institution, but it is simply, I presume that you all know the law, so I'm not doing it. This form is replica of the entire provisions which are applicable to charitable trust and charitable institutions. So this is what exactly is the law that we need to follow. So if you see this form 10B is basically an audit report, what has to be given by an accountant within the meaning of section 288 of the Income Tax Act, which is nothing but an chartered accountant in practice. So a chartered accountant in practice has to give these information to the income tax department, and they have to perform the audit. The first form says that under which clause, etc., you are doing this audit. So 10B is a form what you have to do an audit for an institution which is registered under 12A of the Income Tax Act, and 10BB is a form for 1023C. So this information, first of all, you have to give an audit report. That audit report is in the prescribed format. So there is no problem in it. The only problem what I found a common mistake is, so they said that, okay, I have reviewed and audited the balance sheet, etc., of this company, this trust, this NPO, this section 25 company, etc. And they said I also verified the profit and loss account. So please be careful. There is no profit and loss account for these kind of institutions. There is an income and expenditure account. So please mention income and expenditure, not the profit and loss account. If you have certain observations that you want to mention, maybe qualification, may not be qualification, you please mention appropriately your qualifications, your observations, and your things, what you want to tell to the assessing officer in the form, the first part it is. So the form itself is an audit report. Then there is an annexure to the form. In that annexure, you need to give information which is being asked by the income tax department. As an auditor, you need to fulfill and you need to provide them. There is a first which is called as the basic details. So basic details will tell about what is the PAN number of the auditee, what is the name of the auditee, assessment year of the auditee, previous year of the auditee, registered address, or any other address. So please, the clause number 6, other address, is very important, where we generally do not mention it correctly. So a trust or an institution may be registered at X address, but the actual office of the trust or institution is Y. So let us take a simple example. My trust is registered at my residence address, but they have an office at B address also. So as a registered address, I have to mention my address, but the B where the office is actually located, that also I have to mention it in point number 6. So please mention the correct address where you, to the best of your knowledge as an auditor, if they have any offices, so you mention those addresses at para number 6. Then this is the basic detail what you need to fill. Then the legal status. So what is the legal status of the auditee or of the person whom you are doing an audit, whether they are a trust, they are a society, they are a section 8 company or section 25 company other, or there may be some other entity, other kind of an entity, which may be like any NGO which have been created by a special act or something like that. So then you have to choose between the 4 entities, whether it is trust, society, company, or any other. So these you have to mention it at para number or point number 7. Now the point number 8 says whether the institution, if it is an institution which have been created by an act of the parliament, or it is institution which have been governed by the act of the state legislature or any other instrument like that by way of a notification, etc. So then you have to say whether it is there or not. If yes, you have to select yes. If it is no, then you have to select no in that. So that is what one has to do it. So first 6 is basic, then 2 is about the legal status. Then the most important part, which is important to be mentioned, is 9, which is about the registration. That whether the auditee is registered under the Income Tax Act, and if answer is yes, because that is why you are filing this form. So if they are registered under this, then you have to mention that under which section you are registered, when you have registered, when the date of registration, and the unique reference number, URN number or unique registration number, whatever they have given you, that you have to give them give the number, who have given you the approval, whether the CIT have given the approval or it is done by the CPC, that is there. In case of provisional registration, then you say it is CPC. In case of a regular registration or after provisional registration, it is a normal registration. Then you have to write that CIT exemption have given you this registration. If it is not a provisional registration, means it is a registration which is being approved after provisional, then you have to also mention the date of provisional registration that is being done by you, and the effective date that is being mentioned there in the clause number 9. So that is what you have to do. Now the real problem may come in the following cases. Now what are the following clauses? At point number 10, you have to give the details of all the authors of the trust, all the founders of the trust, settlers of the trust, trustee of the trust. So till here, there is no problem. We know who are the trustee, who are the founder, who are the settlers, etc. In case of a society, members of the society, members of the governing council, directors, shareholders, etc., who are having more than 5%. So there is no problem. Office bearers are also known. Many people ask me that they don't have the details of all the people. Then what should we do? Because practically in a bigger trust, there are a lot of people which compiling information of all of them sometimes become impossible. So in those cases, what I suggest you is to mention the key people who are actually running the trust, who are actually managing the affairs of the trust, or whatever annual filings they are doing with the respective registrar, etc. So which mentions all the people. So those people, the details of the same you have to mention very categorically in para or in point 10A of the form that you have to do. You cannot skip this 10A. Then in case of a person who is a non-natural person, or who is a person who is not an individual, then you have to provide the detail of all the companies, partnerships, trust, AOPs, etc. So there may be one company may be the founder of another trust, or so we may think of any organization which have been founded by the companies, etc. So those information has to be given in para number 10. So whatever available with you, take a proper MRL, management representation letter, from the trustees or from the trust or from the institution, that these are the founders, these are the office bearers, these are the managing councils, directors, etc. of the trust who holds, or any shareholder who holds more than 5% of the share. So here the management of the trust is also not very important. 11. So 11 is a point where you have to see what are the objects of the trust. So objects should be as per the form of approval given. So if you are in relief to poor, mention relief to poor. If you are education, write education. If you are given exemption, or you are given, sorry, not exemption, if you are given registration under general public utility, then in that case you have to mention GBU as a general public utility, under which clause you have been given. So please check the registration form, and based on the registration form on point number 11, you have to mention it appropriately, that what kind of objects that a trust is being created. Now 12A, just hold on, I have one So point number 11 is talking about the objects of the trust, which should be as it is, whatever is being mentioned in the registration certificate, that we need to mention it here. Now move to the next point. 12 subsection 1. It's 12.1, then 12 will give you all the details about the trust. So 12 will say and ask you whether the trust which have been registered under section 12 AA of the Income Tax Act has adopted or undertaken any modification in the objects. So for this particular purpose, you need to ask an auditee, and you have to take a management representation letter, as well as you need to check what at the beginning of the year and at the end of the year, during that period, is there any kind of an amendment which have been undertaken in the trust deed or in the MOA or in any other document? If answer is yes, and we know that now there is a provision in the law which talks about that if there is any amendment in the trust deed, any amendment in the terms and conditions, or if there is an amendment in the MOA, then they have to go for an reapproval and re-registration of that trust. So this 12 point is in compliance with that particular law, and which says that if there is an amendment, if there is no amendment, mention no. If there is an amendment to this rule, then in that case, you have to mention yes, and then you have to answer it whether they have applied for it, not applied for it, whatever way. That is what point number 12 that we need to tell very categorically in point number 12 about the amendment or modification in the activities or in the objects of the trust or the institution, that we need to mention it in point number 12. Look, this is the facts of the case. So if there is an amendment, then it is okay. If there is no amendment, then it is absolutely fine. Now, next comes with the point number 13. We know that the law have been amended, and according to the new amended law, each and every institution will get an provisional registration. And after getting a provisional registration, whenever they have commenced their activity, after the commencement of their activity, they have to go for a re-registration, and they have to take a proper regular registration. So point number 13 is in compliance of that. So they said whether the auditee have been given a provisional registration. If answer is yes, whether the activity have been commenced. If our activity have commenced, then what is the date of commencement? And if the activity have commenced and date have been mentioned, then whether they have applied for a regular registration. If yes, then they have been given that regular registration. Then you have to mention the date and other status, whether it is pending, it is granted, it is cancelled, whatever way it is, that you have to give in the point number 13, which is talking about the provisional registrations for a trust where the activities have been commenced during the year or have not commenced even during the year. So that you have to mention it at point number 13. So that is what one has to give these details, that in para number 13 of the form 10B. So that is what we have to do. Now comes to the important provision which we were not supposed to fill it earlier. However, in the tax audits, we are filling this information. So this 14 information is pertaining to a clause. In tax audit also, we are required to say that what are the books of accounts being prepared by the assessee, and what are the addresses and the location where these books of accounts are being prepared. These are being kept. So in tax audit, we are already doing it. Now they have brought this particular provision or this particular information here in 10B also, where as an auditor, I have to mention whether the trust or the institution is having proper books of accounts. And if they have a proper books of accounts, then it has to mention what are the nature of books of account and whether the same has been mentioned or it is not mentioned. The very good part, what they have done it here is, now they have given me an option whether these books are being maintained manually or whether these books are maintained through a computer system. That is, I have a liberty whereby I can mention it properly in the system, in this point number 14 itself, that okay, these are the books which have been maintained, and these books have been maintained by the institution, either in a computer, in a computer manner, or it is there in the mainland, it is in a computer, or it is a manually that is being maintained. And these information, we need to provide the addresses at that point where this information is registered. So what are the registered books maintained, and places that we need to give this information. So that is what is important at para number 14. So that is what we need to give this information in para number 14 of the law. Any questions you have till now before I move further? The organizer, can you please take out some questions till now? Because then
Sir, we do have a couple of questions with us, but we were taking a question answer session at the end of last 10 minutes. So we'll be taking up all the questions in one go.
Chaviji, I just request you, if you can give me one or two questions which are related to the subject here, because now onwards the subject becomes more technical. So one or two small questions, if you have, not on any of the points covered, so that will be helpful.
Sir, it is about Section 8 companies and Section whether 7 in Section 13(3), whether 7 governing body members of the society registered under Society Registration Act be considered as trustees. Similarly, whether director of Section 8 company will be considered trustees, whether relative of founder in clause D will include relative of deceased founder. I think this is one question which has many subparts.
So as far as Section 8 company is concerned, ma'am, what we have to give the details of the directors, whoever is the director, and we have to give the details of the shareholders who are holding more than 5% shares in the company. So this is the detail what we need to mention.
So the directors will be treated as trustees.
Correct. Ma'am, the word uses not only trustees, they also, in the form itself, they said oblique directors. So the form itself will contain the word directors. So we need to give details of only directors in case of Section 8 companies.
Further, whether relative of founder in clause D will include relative of deceased founder?
I think till now there is no point where we need to give this detail in the form. So these detail is not required to be mentioned in the form.
Next one is, how should auditor identify whether an officer of the trust or institution can be termed as manager?
I think for this, we have to go with the guidance note issued by the Institute of Chartered Accountants of India. How you come to know about the parties covered under 48(2) of Income Tax Act for tax audit purposes, the Institute very categorically said we have to rely on the management representation for that. So for this particular part also, you have to go to the trust and say that give me the related parties, whatever you have, and the managers and other people. Based on those management representation, I need to fill these details. Provided I need to do a prudence check.
The next question is, what if relatives of specified person do not share any details?
So then you have to qualify. That is something which you have to give their information in the form itself, where you say that people, the trustees and the relatives of the trustee do not give me these details, so I am unable to provide this detail. So I'm not able to justify my para number itna. So then I'm qualifying it. Because the law
the next question which is coming, sir.
Yeah.
Okay. The next
please.
question is, Form 10BB is mandatory for educational institutions claiming exemption under 1023C subclause 3 AD, whose income is below 5 crores?
No, it is not required.
So it is not mandatory.
Yeah.
Okay.
Okay.
The next question which has come down, one more. If trust has two schools, but books of accounts are maintained and registered at the registered place, whether any other office is to be filled up?
Sorry, just come again.
The question I think here says, if the trust has two schools, but the books of accounts probably together are maintained at one place only, at the registered place.
Then only one place is to
So
be
is there
mentioned.
only one place is to
One
be
place is
mentioned.
to be mentioned, because books of accounts, they are asking about the books of accounts.
And one more basic question I think, sir, here is there any difference between grant and voluntary donation for reporting perspective?
Grant and voluntary donation, from a reporting perspective, yes, there is a difference. The grant in aid is given by generally the government institution and the government, and they do not require to be reported for ATG purposes. However, voluntary contributions are, every trust and institution is liable to file Form 10BD, where you have to give the details of all the donations which are voluntary donations received from the parties. The grant may be of a capital grant may be of a revenue grant, but voluntary contributions are always revenue, meaning thereby that for the voluntary donation, every trust or institution has to spend at least 85% of the amount to claim an 100% exemption. However, for a grant in aid, the grant in aid may require you to deduct this grant from the capital value of the asset, or it may be a voluntary, it may be a revenue grant, which is normal income, normal voluntary contribution, and you have to apply 85% to it. So that's the difference from an reporting perspective also, that how you will particularly report this grant in your returns as well as in your books of accounts.
Right. So we have other questions, but I think we'll take it post your deliberation.
No problem. So I have covered till books of accounts. Here, if the books are maintained on cloud, so many trusts and institutions are using the bigger software and they're maintaining the data on cloud. So there, which address we need to mention? The address to be mentioned is the address from where I can access those books of accounts. If I can access those books of accounts from the registered office, then you mention the registered office. If I access those books of accounts from the office of the institution, then I have to mention the office address there in clause number 14. Now, let me come to clause number 15. And in this clause number 15, this is basically a legal provision is there, whereby if I am registered under general public utility, any other object of general public utility, and I am doing any activity which is in the nature of trade, commerce, or business, then in those cases, I am liable to pay tax and my exemption is being withdrawn, provided my threshold limits are being prescribed, where my revenue from a trade commerce does not exceed this much threshold. So those threshold limits have been incorporated in the form at para number 5, where as an auditor, I have to say that whether I am covered under general public utility. If answer is yes, then whether I am doing any activity which is in the nature of trade, commerce, or business. If answer is yes, I am doing an activity, then I have to mention that how much is my percentage received coming from those activities which are trade, commerce, and business. So that is what we need to fulfill all the details with respect to those mentioned in paragraph number 15. So 15 is basically for applicable on all those institutions and trusts who got registration under the general public utility. So that is what one has to fill the details. 17. So 17 is the point which deals with 11.4. 11.4 is basically an undertaking or is held undertaking in the nature of business which is held by a trust. So my business, I donated it to a trust, and trust is holding this business as an assets of the trust. So the law says that this business, whatever income I earned from that business held as an asset of the trust, is allowed to be exempt if 85% of the same profit is being spent, provided I need to maintain the separate books of accounts. So para number 17 is talking about the same, That 17 says whether you are doing a business which is covered under 11.4. If answer is yes, what are the nature of business, what are the kind of activity you are doing? And this is most important about C point, which they are asking you whether you are maintaining separate books of accounts or not. If the answer is yes, then you have to give the amount of income, amount of revenue that you have incurred, and the amount of expenditure or amount of application of the income that you have done during the year, that you have to mention it, point number 17. Similar to 11.4, we have to do a reporting of 11.4a also. So 11.4a is the incidental business to the attainment of the main object of the trust. So this is also allowed as exemption, provided 85% of the amount have been spent on doing charitable activity, and we need to maintain a separate books of accounts. The same thing have been asked in para number 18 or point number 18 of the form, which says yes, whether we are doing any activity of 11.4a. If yes, what is the nature, code, amount of earned and amount spent on this incidental business that we need to maintain in this form. Now comes the 19. So 19 is nothing but the claim of the TDS. So in 19 point, we have to mention all the TDS which have been deducted on the receipts of the trust. What are the TAN number of the people? How much is the amount on which TDS is deducted? Actual amount of the TDS, under which section the TDS is deducted, and whether it is in the nature of trade, commerce, or business, or it is 11.4 or 11.4a. That is what we need to mention. So basically, I need to do a reconciliation of the entire amount on which TDS is being deducted with vis-a-vis the amount mentioned and offered under which particular head, and whether the separate books have been maintained for that particular activity or not. So if it is, let's say, if it is an TDS which is deducted only on interest, so then you say that there is no need to maintain a separate books of account, and it is not taxable under 11.4 or 11.4a, or it is not in the nature of trade, commerce, and business. You can simply mention others for that, and you can report this transaction under clause number 19, which is important, where we need to give this detail in the form. Then comes the provisions with respect to the voluntary donations and the provisions with respect to the filing of 10BD form. So there they have asked you this information, whether the auditee have filed this form, is required to file this form, have filed this form in the previous year. If answer is yes, then you have to give the details of that, how much donation they have received, etc., and under what section of ATG they are claiming those deductions. So all the details that you need to file with respect to this form 10BD, with this, which every trust is required to file to give benefit of ATG 5, etc. So those details you have to file it in point number 23. Then along with this, you have to also file the details of the anonymous donation or donations received in kind. So if during the year the trust have received any donation in kind, so the donation of in kind, the value of the same has to be mentioned here in point 23. And if there is an anonymous donation which you are taxable at the rate of 30% straightforward, is also required to be mentioned in point number 23 itself. And if you are doing any kind of an activity which is covered under 115 BBC, which is anonymous donation, you have to mention all the sub clauses separately in the form. That is only a data that you need to take out, and you have to fill this form directly in this. Then you have to mention the total voluntary contribution received by the auditee in para number 24. So the question which people are asking me is a question that whether this total contribution received by the SSC will include a 10BD or not. So here, if you see, the utility itself will give you an option. Above 24, you have to mention that what are the amount of contribution for which you have filed 10BD form, and what are the contribution that you for which you have not filed 10BD form. There might be a case of a charitable dispensary whereby you are getting some voluntary contribution eligible for 10BD form, or people have given you the information for a ATG deduction, and there may be some other receipt and other voluntary contribution which you have received for which you have not given the benefit of ATG and you have not filed 10BD form. So there might be possible like this. So there you mention it at 23(7) itself. So 24 is basically aggregate of the donations that you have received from a 10BD form for which you have filed, and the other donations that you have received. So you aggregate, this is the total of 24. 24, you mentioned this total. Then your FCRA. So whether you have received any contribution out of from foreign contribution, that you have already mentioned it, because you may not have filed 10BD form for the same, because these have been received from people outside India. So if you do not do it, then you must have mentioned it under the 23(7) itself, that okay, these are the. Now under clause 25, you have to specifically mention that how much is the total contribution being received by the trust or the institution from FCRA and from foreign. And please cross check the same with the annual returns that we file for FCRA. And we all know that in FCRA, I have to prepare a separate income and expenditure account, which is along with the receipts and payment account also. So there we have to certify the receipts and payment account, mainly, where we show that, okay, these are the receipts from the foreign and these are the payments made by the trust from out of the foreign contribution. So those things have to be mentioned properly in the FCRA returns. So point number 25, the para number 25 has to match with the total of the receipt and payment certified by us or the management to FCRA authority, which is Ministry of Home, for the FCRA purposes. The same amount should be mentioned at para number 25 of the form 10B, which is the contribution received in the foreign currency. That is what we have to do. Then we have a provision of 11(1)(d). 11(1)(d) is called as a corpus donation. So the trust or the institution, charitable institutions, are receiving certain amounts which are exempt, which are not required to be spent because they are in the nature of corpus donations. So these corpus donations has to be mentioned very categorically at point number 26, where they have made it a separate column 26, where you have to mention these forms that, okay, these are the amount which are eligible for corpus donation as 11 exemption under 11(1)(d), and you have to mention those amounts in para number 26. So that is what you need to do. Then we have para number 27, which is talking about that whether there is any voluntary donation which have been taken by the trust, which have been actually utilized or applied during the year. So those amount, which is amount spent, I need to certify based on the provisions that what are the incomes which have been applied by the charitable institution, which are eligible application as per the law. With I need to specify this in para number 26, 27, 28 and 29, and those things have to be there, whether we have applied this out of India, within India, etc., and under which head. So that is like a income and expenditure account, so that I need to fulfill all kind of information. I think we are doing it for the last year also, so this is exactly same. If there is any disallowances, that is to be mentioned, and that whether there is a disallowance on account of cash expenditure, disallowances on account of TDS non-deduction, etc., or any other disallowances that we need to do. So those things have been properly mentioned in the form 10B in detail. I think it is also there in the last year, so that we need to do it and give it properly in form 10B of the current year. Now come to the second part, which is compliance of section 115 BBI. So those are the provisions with respect to the 30% tax what every trust has to do. So in compliance with those 115 BBI section, we need to give and provide all the details, which is 90% cases this is not applicable. So you are not required to be very worried about it. But yes, in this clause we have to categorically mention how much is the amount which have been spent by the trust over and above the 15%. So those things has to be mentioned in compliance with 115 BBI. So not very important. So you can simply mention it, these things. Then last in this category, we have to provide us the anonymous donations which are chargeable at 30%. Believe friends, in the above column also we have been asked to give the details of the anonymous donations received. So those anonymous donations received reported earlier by me as an auditor has to match with the amount mentioned in point number 34 also, where the anonymous donation received there and anonymous donation mentioned here should be same. So 34 has to be matched with the earlier form. That is the important part, what one has to give the detail in the 10B form. Then comes to be the part specifically which is towards the other income. So if the auditee have any other income which is not mentioned above, any kind of an income which is not covered above, then you can mention it there, which includes 11.4 or anything which is actually you feel that you want to offer it, so that can be done in 35. Then comes an important point of 11.4a, 11.1a. So 11.1a says that a charitable institution, if they have a capital asset and they sold that capital asset during the year, then the entire amount of capital gain is exempt if the entire amount received from sale is invested into another capital asset. So point number 36, para number 36 talks about that whenever there is a sale of a capital asset during the year, then you have to give and report to the income tax department in para number 36 that okay, whether there is a sale, if there is a sale, how much is the amount of sale, how much is the amount of profit that have been generated, and whether that profit is being employed in buying another capital asset or not. So all these provisions with respect to capital asset has to be mentioned in para number 36 that we have to tell. Then 37 is just a reconciliation which we have to do, that whatever expenditure and applications that we have mentioned above, out of those expenses, how I have financed it. So whether I have financed it out of the current year income, whether I have financed it out of the 15% accumulation that I did it in past, whether I have financed those from a corpus donation that I have received, or I have financed it from a borrowing funds, or there is any other. So if, let's say, if I have a total expenditure of, let's say, 100 lakhs. So out of 100 lakhs, my receipts is, let's say, during the year, my receipts, voluntary contribution and all other income is, let's say, only 50 lakhs. So I can say that my 100 lakh expenditure, I have financed 50 lakhs from the current year income. Then from where this remaining 50 lakh comes? So I said, okay, I have a past accumulation of 15% amounting to 20 lakhs. Okay, so out of 100 lakhs, 50% is out of current year donations, 20 lakhs is from the past accumulation that I have made. Then I said, okay, remaining 30 lakhs, I have financed it out of the corpus donations. So put it corpus 30 lakhs. Or there might be a case that the trust may have taken a loan from outside. So I've created a building and I capitalized the building, but the building I have brought it through a fund. So I have borrowed funds. So I have to mention that this building I have financed it through a borrowed capital, etc. So this is what I have to mention in the 37, a reconciliation that how my total expenditure or total application that I did it during the year is being financed. So either it is from out of the current year income, or it may be out of the past accumulations, or it may be out of 11.2 accumulation, or it may be out of corpus, or it may be borrowed funds. So that is what I need to give a reconciliation of the same under clause number 37, 37 of the 10B form. Then there is an specific questions which have been asked by the income tax department from the auditor, which we have to mention that whether I have made a payment as an institution or a trust have made a payment to a single person exceeding 50 lakhs. So if the application is being made and the payment is being made by a single person exceeding 50 lakhs, then that person detail has to be there. Then somebody may ask, if this is not being available, then you qualify it. You have no option, but you have to report this specific. If if the payment is made in excess of 50 lakhs to a single person, then those things have to be mentioned along with the PAN details and others. So this is an additional requirement which have been brought in the law or in the form this year, which was not there earlier. So you need to be very specific about that. Then the paragraphs are coming with respect to the other provisions, whether it is 1310 people and all second provisos, etc. So all kind of expenditure, capital expenditures, etc., which are disallowed under the law, or any expenditure which is not incurred in India, any income of the previous year which is being received, etc., any loan, borrowing, depreciation, etc., whatever are the disallowances, then these have been asked in 39. I think it is already there earlier also, so there is no need to worry about that particular thing. Then comes about the religious institutions. So whether the auditee who have been approved under 80G5 and that particular entity or the particular trust, if they have incurred any expenditure for religious in nature, so those things has to be mentioned here. So this is applicable mainly in those institutions which are partly charitable and partly religious, or maybe religious institutions. So then point number 14, we have to mention it for all the religious institutions, that what kind of institute expenditure they are making, and that is to be mentioned at para number 40. 41, very easy, talks about 13(3) people, which is related party. So all related party, if the trust is making any kind of a payment to them, that we need to mention it in para number 41. So all 41, 42, etc. is dealing with the related party transactions, or the trustee of the trust, settler of the trust, or a person who have made the substantial contribution of 50,000 or more, that we need to give. Then a real problem for you comes under 43. We know that any trust, if they are violating any law other than Income Tax Act also, then their exemption is being withdrawn, or this is not allowed, etc. So those amendment is already there in place. Now as an auditor, it is my duty under clause number 43 to mention this. So people may ask how we will do it. So you have to do a due diligence and you have to do a test check, and based on your audit, you may mention these things if you are able to get any of the information like this. So you may please mention and fulfill this 43. If you do not find anything, then you can simply say no. So based on your test check, if you want to mention about this, you may mention it in your other observations in the main audit report also, that in that report you may simply mention that based on the test check we have complied with and given our observation in at para number 43, which is based on the test check basis. That is what you can simply mention in the other observations of the main report, etc. Then what if 44 talks about the depreciation being claimed, because we know that if you claim the entire value of the asset as an application, then depreciation of the same is not allowed. So now you say if it is there, so then you have to mention those things under 44. So all these 44 for etc. is what you need to do it. Then the last, which is very important, which is a new reporting which have been introduced with respect to 269 SS, 269 ST, and 269 T. So these three provisions have been there in the tax audit, but it is not there in Form 10B. Now they have brought in these provision, which is absolutely in line with what is there in the tax audit. So similar to tax audit, you need to fill details of 269 SS, 269 ST, and 269 T. So that what you need to do, and which is exactly same what you are doing in tax audit, that you need to give here also, that that is there. Then there is a clause 49, which is also exactly same what you are giving in the tax audit with respect to the TDS and TCS provision being applicable on the charitable institution. So you need to give the details of the all kind of this information what you've been received, that what are TDS collectible, etc., TCS, etc., those things. Now, in filling this form, there are certain important things what we have to do. We have to give a reconciliation of corpus donation, which is, I think, of a concern. Like on the previous year, what is the opening balance of the corpus donation? What are the amount which have been spent during the year, and what are the amount which have been received during the year, and what are the carry forward amount? The problem in this is that as an SSC, we have to, as an auditor, we have to give this donation, detail of the donation, into three categories. One is the donation received for renovation and repairs for the religious institutions like Ram Mandir, etc. Other donations which have been received on or after 1/4/2021, and any other which is earlier donations, which if it is carry forward. So these informations you need to fill in the respective form, in the respective schedule which is attached to corporate donation, so that one has to fulfill all the details in a reconciliation manner, that we have to provide these information. So I believe that these informations are very common in journal, which can be derived and we can get these information easily from the data available with the institution, and based on that data available, one can simply fill those information and do the reporting. I think there is nothing very big which is there, but yes, we need to do a proper reconciliation of all the loans, 269 ST, corpus, and other things that one has to keep in mind. Now, based on that, I believe that we can always do our work diligently, and this is what we have to do while doing the audit. This is all from my side. Now I am open for questions. So if you have any questions, so please please let me know. I'll try to answer those questions. So I have taken out clause by clause the entire form. I personally believe it is nothing but the replica of the law. The only thing is, earlier these informations are not been asked from an auditor, but as a ITR, we have to fill all those information in the ITR. Now responsibility is being casted on us as an auditor, because we are steps into the shoes of the income tax officer, and the income tax department have entrusted the responsibility and confidence in us as an auditor. So they want to check each and everything. So now for each provision of the law, they have a separate reporting that we need to do as an auditor. Some information are readily available, we can take out. Some information we may not know. So for all these things, we have to go for a management representation letters. Again, my request to all of you is that while doing this audit, this is an audit, this is not a certificate. So while doing this audit, you please comply with all the auditing standards, and adequately you take the management representation letters wherever applicable and wherever you deem fit. And then I leave it to your professional judgment about how to report and where not to report. If you are not getting a support, if you are not getting any information from the auditee, then please qualify it in the audit report itself. Or if it is not in the nature of qualification, then you may write it in other observations that one can do in the audit report itself. So that is all from my side. Thank you very much. Thank you, PDC, for providing me this opportunity.
Thank you, Avinash sir. We have few questions with us which are pending. Would really appreciate your answers for the same. The first one here is, the TDS has to be deducted on amount paid to another 12A registered trust. Are payments in the nature of rent or other expenses?
No. So TDS is deductible whether it is paid to an individual, company or another trust if it is liable to be deducted as per Chapter 17B of the Act. So if one trust is making payment to another trust which is in the nature of donation, then there is no TDS. But if they are making payment to another trust which is in the nature of rent, which is in the nature of technical services, or which is in the nature of other things, so I believe that in those cases TDS have to be deducted.
Do we have to report the details of all society members along with the relatives in clause 41 of Form 10B?
Do you report?
Do we have to report the details of all society members along with their relatives in the clause 41 of 10B?
Yes, because they are asking you to report the transaction, the name of the members who are covered under 13.3. So in case of 13.3 people, you have to mention all the details of the people. Or you can do one thing. In the observation, you say that there are many 13.3 people, but you reported only those 33 people where there is a transaction with them. So that kind of an observation you can give, because I understand in case of a trust, there may be thousands of people who have contributed more than 50,000 and they are covered under 33, which is practically impossible for anybody to report. So you can say that only those people with whom the trust have a transaction, I reported only those, but you mentioned in other observation.
Right. Further, the next question is, what will be the allowability of ITC under the CSR spending? That is the first question.
I am not the expert of GST, so I know the answer, but I am not able to comment on this. I think there was some limitation on that. Some GST expert will answer it. That is not related to income tax.
Can you suggest the qualification we should give about the details of relative of trustees?
No, I'm not saying qualification. You may give an observation. So the observation may be what I mentioned it, that at para number 41 of the report, we have the SSC or the trust have provided the details of only those people with whom they have transactions. Hence, we have considered the same, and based on our test check, we do not qualify this. Or you may go for a qualification straightforward, say that we have requested the information for persons covered under 13.3 have not been provided by the SSC or by the auditee. Hence, we are unable to comment and give the details. Hence, we qualify the same. So those things you will see where you want to qualify and where you want to only give an observation.
Extremely grateful, sir. In this world of virtual learning, connecting with experts like you is an invaluable opportunity. Thank you for being a part of this enlightening experience. We look forward to more such enriching interactions. And the mere fact we were close to the magical number of 1,000 members, that speaks volumes about the kind of deliberation which we had. In light of the
Thank
fact...
you. Thank you very
Sir.
much, Saviji. Just I would like to inform to members who are watching our this live webinar, one important information about this, claiming of these structured and unstructured CP hours. Thank you, Avinash for joining to us. Though it was very short notice, but thank you very much, sir. Because we know you are very busy, but you have taken the time, for this session. So for the members, sir, to them, I would like to inform. Most of the time they are asking how we can claim that unstructured structured CP hours for these programs, webinars being organized by CP committee or any of the committee. So for the information of the members, these webinars are eligible for grant of 2 unstructured CP hours. So the member can claim the unstructured CP hours by logging into their CP portal in their dashboard, and they can claim directly from this online portal. They need not write to us, or the committee will not upload the unstructured CP hours. This is the self-declaration form that has to be filled in by the member on CP portal. This is one important information. And also please, because the members who are not holding COP, their requirement is completed by doing this unstructured only, 20 in a year. So it is request also, please, do fill this form in online portal time to time, so that you are also complied with the CP hour requirement. Thank you, Chaviji, to you also on behalf of the committee. Very good,
Sir, as the
moderator
moderator of the
session.
session, would like to extend a formal vote of thanks. And
Yes,
it's my
sure,
privilege to
madam.
extend a
It's your
formal
right.
vote of thanks to all of these who made this event possible. Since the speaker has already left, so it's the first and foremost a profound appreciation to our distinguished both the speakers, Avinash Gupta ji and Mohit Golcha ji, who not only shared their invaluable insights, but in today's world. I would like to express my sincere gratitude to the entire organizing team, starting right from the secretary, sir, Ajit Nath Tiwari, sir, to Pragya ji, Payal ji, Shrey, Chirag ji, Parth. A lot of people are running around it who have made this event possible. Though your dedication and hard work have made this webinar a resounding success. A special thank you to all the participants without whom this gathering would not have been enriching. Your active participation, questions, and eagerness to learn is the driving force behind this knowledge sharing endeavors. I would like to conclude by thanking each one of you for being a part of this webinar. Your presence and contribution has made this event meaningful and memorable. Thank you and have a wonderful day ahead. Thank you so much.
Thank you. Thank you.